shot. In 2025, BuzzFeed News shut down permanently. Vice Media filed for bankruptcy. Vox Media executed layoffs across multiple brands. Mic, Mashable, and Fusion all sold for fractions of their peak valuations or disappeared entirely. The Onion, a satirical newspaper founded in 1988 by college students in Madison, Wisconsin, still publishes. The question is not why digital media collapsed. The question is how a fake news operation outlasted the real ones. The Onion began on August 29, 1988, as a free weekly print publication distributed near the University of Wisconsin campus. Founders Tim Keck and Christopher Johnson launched it with $7,000 in seed money, using humor to parody traditional journalism while relying on the same advertising model that sustained alt-weeklies across the country. Early articles followed a simple template: take mundane observations, frame them as breaking news, and write them in the deadpan Associated Press style. One early headline read, "Rotation of Earth plunges entire North American continent into darkness." The joke worked because the format was indistinguishable from actual wire service copy. The publication moved online in early 1996, years before most legacy outlets treated the internet as more than a curiosity. That timing mattered. The Onion built its digital infrastructure without needing to protect a legacy print business or renegotiate union contracts. It owned its own content management system and could publish instantly without waiting for editorial board approval or advertising layout coordination. By the time major newspapers began investing in digital platforms in the early 2000s, The Onion had already cultivated a native web audience that understood how to share articles through email and early social networks. The expansion phase followed an unusual pattern. In 2007, The Onion launched the Onion News Network, producing satirical video content years before most text publications attempted the format. Comedian Bob Odenkirk called the publication the best comedy writing in the country in 1999. In 2012, The Onion's website attracted approximately 7.5 million unique visitors monthly, according to contemporary industry reports. The publication also launched the AV Club in 1993 as a non-satirical entertainment section, and ClickHole in 2014 as a parody of viral clickbait sites. Revenue came primarily from display advertising, event sponsorships, and branded content partnerships where advertisers paid to create fake articles in The Onion's voice. The peak arrived in the mid-2010s when The Onion commanded both cultural influence and measurable reach. Articles from the publication routinely tricked readers into sharing fake stories as real news, generating secondary waves of traffic when the mistake was discovered and discussed. In 2016, Univision Communications acquired The Onion along with several other digital properties, folding them into Gizmodo Media Group. The purchase price was not disclosed, but industry observers estimated the combined valuation of the portfolio in the mid to high tens of millions of dollars. At that moment, The Onion appeared to be following the same trajectory as BuzzFeed, Vice, and Vox: grow audience, attract venture capital or acquisition money, scale rapidly, and prepare for an eventual public offering or larger exit. The structural weakness was already visible, though most observers missed it. Digital advertising was consolidating onto two platforms, Google and Facebook. Publishers built business models assuming they could reach audiences through organic distribution on social networks, then sell display ads against that traffic. But Facebook began throttling publisher content in favor of personal posts and paid promotions starting in 2018. Google controlled search traffic and ad rates simultaneously. The Onion faced the same margin compression as every other digital publisher, but it had a hidden advantage. It never promised investors exponential growth. The publication had no venture capital debt to service, no expectation of a 9-figure exit, and no incentive to chase viral traffic at the expense of editorial quality. The decisions made under those constraints separated survivors from failures. BuzzFeed, Vice, and others raised hundreds of millions in venture funding during the 2010s, which required them to show quarter-over-quarter audience growth and prepare for liquidity events that never materialized. When Facebook's algorithm changes cut referral traffic by 30 to 50% across the industry starting in 2018, venture-backed publishers faced a choice: lay off staff to preserve runway, pivot to video despite no clear revenue model, or sell quickly before valuations collapsed further. The Onion made a different choice. In 2013, years before the pivot to video wave, The Onion stopped publishing its print edition and focused on digital text and video it could produce cheaply with a small, experienced staff. When Univision sold Gizmodo Media Group to private equity firm Great Hill Partners in 2019, forming GO Media, The Onion became part of a portfolio optimized for profitability rather than growth. The unraveling of digital media accelerated between 2020 and 2023. Programmatic advertising rates fell as supply exceeded demand. Subscription models worked only for a handful of elite outlets with dedicated news audiences. BuzzFeed News shut down in April 2023 after the parent company's stock lost more than 90% of its value from its December 2021 initial public offering. Vice Media filed for bankruptcy in May 2023 and sold its assets for $425 million, a fraction of its $5.7 billion valuation in 2017. Vox Media, which had raised more than $300 million, executed multiple rounds of layoffs and folded several verticals. Hundreds of media jobs disappeared each quarter. The Onion did not escape the collapse, but it did survive it. GO Media, the private equity-owned parent company, managed costs aggressively and prioritized stable cash flow over audience growth. Then in April 2024, GO Media sold The Onion to global Tetrahedron, a newly created firm backed by Jeff Lawson, the former CEO of communications platform Twilio. The purchase price was not disclosed. Lawson's statement emphasized editorial independence and long-term sustainability rather than growth targets or monetization experiments. In August 2024, global Tetrahedron revived The Onion's print edition, a decision that would have been financially irrational for a venture-backed growth company but made sense for a profitable publication with a loyal audience and no pressure to scale. The aftermath reveals what separated the survivors from the failures. ClickHole was sold to Cards Against Humanity in February 2020. The AV Club was sold to Paste Magazine in March 2024. Both sales reduced The Onion's portfolio but preserved the core brand. Meanwhile, BuzzFeed News ceased to exist. Vice's brand survives in name only under new ownership. Gawker, sold and relaunched multiple times, never recovered its original audience. Mike sold for $5 million in 2018 after raising over $60 million. The Onion remains operationally independent, publishes daily, and continues to attract millions of readers monthly without relying on venture funding or platform distribution. The mechanism that explains this outcome is not talent, timing, or luck. It is the absence of venture capital and the expectations that come with it. Digital media companies that raised large funding rounds in the 2010s were structurally required to pursue unsustainable growth. They hired hundreds of employees, opened international bureaus, and produced expensive video content to justify their valuations. When advertising revenue failed to support those cost structures, and when initial public offerings or acquisitions failed to materialize, those companies had no path to profitability. The Onion avoided that trap, not because it was smarter, but because it never took the money. It remained small enough to be profitable, focused enough to avoid costly pivots, and cheap enough to survive margin compression. The collapse of digital media was not a failure of journalism or creativity. It was a structural mismatch between the venture capital model and the economics of advertising-supported publishing. Companies that optimized for growth died when growth stopped. The Onion optimized for sustainability and survived by being worth buying, but never worth scaling.